What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a look over here at the Bitcoin price chart and the altcoin market, including the XRP price chart. As Bitcoin's price continues to hold here above $26,000, prices remained pretty much flat over the course of the last week, ever since we had the liquidation that took place, where in an instant 5 minutes, it was as if we had an FTX collapse happen. There was so much liquidations exceeding $1 billion on that day. But fortunately, prices have remained relatively stable ever since then. Of course, we even saw altcoins go for that plunge when that moment happened, including the XRP price chart. We've paid attention to what completed crashes look like. I have XRP up here on the top, comparing it to Bitcoin back in 2014, comparing it to the altcoin market of 2018 to just show the structural setup and completion of when you finally get the liquidation and eventually take place when the range has gone as far as it can handle. To this point, for the last week, we can see that it is still just holding fine, meandering sideways as we actually expected. So we do see stability here, as we've seen over here with Bitcoin. Now, earlier this week, I'd put together a video. We discussed all about 12K and how the structural damage would occur to the chart in the event that happened. However, what we've definitely noticed is on a timing perspective, lining the market up to peak right where we peaked. We have been right on pace, and even the action that we're having right now as it has broken upwards and gotten above a 9-month resistance was precisely what we had done back in 2015 as well, although somewhat of a morphed accumulation structure in here, which was following until FTX. Still, it breaks out at the exact same time and now still sitting on top of that support, going on 5 months now. So when it comes to like Bitcoin and trying to say, hey, are we going to hold the support? Are we going to start marching our way back up? Are things going to turn around for crypto? One of the major things I pay attention to is the United States stock market. I've presented that case many times before of a correlation between the US stock market and the Dow Jones Industrial Average, to be precise, and Bitcoin, and how that translates into all of crypto. Throughout the years, I've expressed the concerns I have on the Dow Jones with how high it is getting very close to a 4.236 extension. Still not quite there yet, but I was even making YouTube videos on this channel during C19 back in 2020. Still maintaining that bullish perspective that we were not starting the Great Depression right here, even though the world believed we were. Come July, we were still sitting at massive unemployment, stimulus checks, concerns over health. The world was convinced the sky was falling. However, not here. Heck, even during this pullback, not concerned the sky is falling just yet. How many times did we see on Twitter the great financial crisis fractal placed over here as people thought it was going to go into Doomtown in late 2022? We didn't think that here. It had been stated at a minimum to see at least a retrace come out of the United States stock market, whether that's the S&P, the Dow Jones, or the NASDAQ. The idea was that we would at least at a minimum see a retrace come out of there. And fortunately, over the last month or two, we've definitely seen prices move a little higher. We saw all retrace levels get cleared for all three major indexes, including the Dow, the S&P, and the NASDAQ. But as we always talk about on here, it's remembering how high this Dow Jones really is, how high the NASDAQ is, and how high the S&P is. Based on the great financial crisis, kind of get a real look here at how high this has gotten in relation to the 4.236 Fibonacci extension. Gotten very close. We saw something very similar happen over there with Bitcoin back in 2020 and 2021, that it ran up, got almost to a 4.236 extension on its market cap, exceeding the 3.618 to make a big pull down and scare the market, only to eventually go on and hit it before then lights out. And we've discussed that many times in here with the Dow, now that these retraces have been exceeded, and theorizing, are we going to get something similar like that currently right now? We've even shown what the roaring 20s looked like back in the 1920s, leading into the crash of 1929, of course, the Great Depression, and how the height of this just so happens to match up with our 4.236 fib extension. And to put in perspective how high the Dow Jones has risen, it's up about 425%. And in order to reach the same magnitude of the roaring 20s, which eventually led into the big tumble all the way back down, it's only 14 or 15% away from where we are currently right now, which gives you a real perspective of how big this rally has been for the last 14 years. Not only that, but the similarities of them leading into that moment as well. But the big debate comes on whether or not this is nothing more than a overextended retrace, or do we have one more push upwards before then it's over for the stock market? Solving this likely solves what's going on over here with Bitcoin. Again, still a heated debate. A lot of people believe the sky will fall for the US stock market and Bitcoin rises from the ashes. There's no historical context to support that idea. I've made lots of videos, tweet threads, newsletters, data packs supporting the idea, and the evidence that the correlation of Bitcoin with the Dow Jones Industrial Average is essentially unequivocal, which means not even really up for debate. So, to have a thesis on what happens with Bitcoin, one likely has to have a thesis of what's going on with the Dow Jones Industrial Average. And while prices still sit still here for Bitcoin and for XRP, we have seen some action over here in the stock market in the last couple of days, as we've seen all major indexes pull back down after exceeding all retracement levels in here. Yesterday's move was quite aggressive. By the end of the day, I was watching Twitter spaces that were happening over there on X.com. Do we call those X spaces now? But essentially titled Market Crash. Is this the beginning? Nearly 1,000 people in there. And you can see the concern is definitely picking up here for the stock market. Normally, I can use those Twitter spaces as pretty good gauges for sentiment to say, people are over worried, or ooh, they're fist bumping and playing music. They're too excited. But I do understand the justification for them holding that Twitter space yesterday because of the move that we did see over there on the Dow and the S&P. One thing we've been talking about has been holding that support level. After holding it for nearly a week, it goes plowing right through it. Not only that, it gave really kind of a teaser morning where the Dow opened up and then went up 200 points, lost all of it, and then closed down 373 points. So we're talking a swing of over 500 points, getting really close to 600. However, the daily candle was 373. But the concern comes here now, okay, have we started breaking down? We talk about fibs a lot and techniques to use fibs, where when treating them as retrace targets, a trader will sell at the retracement, place their stop loss above the stop loss. In the event that it goes through and gets through the final one, their stop loss will get triggered. Then what happens? The new stop loss gets placed lower, and then boom, we're now coming back to it. So this would be getting awfully dangerously close to triggering a second stop loss in that event. And the concern about that is typically if you're going to do that, that's not the end of it. So yesterday's aggressive move really sparked a lot of concern, not only just because it was a big day down. Heck, we see big days down like that all the time. Just zooming in on the days that we've had here in the last 6-8 months, just in 2023, 373 points. Hey, we went down over 500 here. We went down over 300. This one down over 300. This one over 600. This one over 600. Over 500. About this one over 4 right here. It's really not unusual for us to have these days where we exceed 300 points, just really in the last 8 months. Even right here at one point, this candle was down over 400, along with this doozy right here that was over 5. So 373 for a candle body doesn't exceed what we've seen, right? 4, 5, 6, 5, 6, 5, 3, 3, 3. 373 isn't that big of a deal in the context of all of it. But what you have is a lot of people on edge right now because we've gotten back into a retracement. We just saw what happened with crypto. We saw that 10% 5-minute liquidation happen there for Bitcoin. And smart money is likely on their edge of their seats, and smart traders are on the edge of their seats, knowing everything is kind of high alert with the Dow from here on out, and the stock market from here on out. And so while we have Bitcoin sitting on top of the support, which lasted for 9 months as a resistance, we've now been sitting on top of it for 5 months as a support. Of course, everybody's looking for clues everywhere, including me, to say, hey, this thing can continue marching its way up into a retracement for Bitcoin and not be the start of something devastating like we've talked about with Ethereum and comparing Bitcoin for the last couple of years. So the challenge comes with trying to draw that line in the sand of saying, when do things go terribly wrong here in the stock market? At what point do we say things are breaking or that we no longer have context that is consistent with anything in the past? When it comes to retracements and barely going to set a new high, like we're talking about going to the 4.236 extension. Of course, there can be challenges in here when it comes to using these retracement levels, like we saw back here in 2018, the bounce in 2019. You get through all retraces, you go back through all of them to then just keep kind of meandering sideways to finally go up and hit that peak to then fall apart. Then the same is true back here in the early 2000s before we go into the great financial crisis, right? We go back into this retracement. This is the dot-com bubble pop, falls all the way into 2002, gets back into retracement levels, exceeds all retracement levels right here, pulls all the way back down to the 618 right in here, exceeds them all again, pulls back down, gets all the way up, back through the last one again. So we can go through these quite a bit, whether we go back to the 2000s or we go back to just 3 to 4 years ago, that a lot of challenges took place during this time period and during this time period as it was attempting to get that last little breakout before rolling over. And so that's really kind of where we sit right now in all these retracement levels in here for the Dow. We've definitely seen we've exceeded all of them. But if you follow a good friend of mine, TXMC Trades or Alpha Beta Soup over there on YouTube, he presents a ton of amazing data showing the underlying weakness in the US economy. Now, that weakness has been there for quite a while. We've seen the entire rally in the stock market happen with this underlying weakness happening in there. But of course, everybody's on edge of, is this thing going to turn over on itself, because we do have all this underlying weakness that is happening in the economy, whether it's record levels of credit card debt, interest rates, the issuance of new debt. Auto loans are like 10% interest rates, consumer confidence, consumer spending, inverted yield curves that are usually precursors to recessions that come out. However, employment has remained consistently high. We've not seen levels of unemployment spike at this point. That's usually the last domino to fall. And there haven't been any signs yet of employment weakening. But everybody sees all the other economic data and sits there saying, when is this thing going to go? And of course, the market just keeps rising into that. But if we look at the charts and we look at the price action of what has happened in here, we do kind of see something consistent that we are experiencing right now that we can go back and look at in here, and that we can go back and look at in the run up prior to the great financial crisis. And that is the consistent set of higher lows that come in here. We could see that we get back to retracement levels, and then we just keep setting higher lows one by one, marching our way up until eventually we start to lose some of that steam, and then we just can't hold them anymore, and then down and away we go. So higher lows were consistent all the way through here until we finally broke. We can also see that over here back in 2019 heading into the C19 crash, that we have the same thing. You have consistent higher lows getting set in here until finally we run out of steam, and then we take it out. Second, we take out the higher low, boom, lights out. If we look over here on the Dow, currently right now, we are still experiencing that. We do see higher lows getting set in here, and that we haven't seen a lower low come in just yet. If this thing were to say reverse right in here and start working its way up, we would say, hey, look, there's another higher low. We just keep marching higher and higher and higher. However, should we go take that out, then we experience real concern about it. But if we kind of compare that, if we look at like what it was like when the dot-com bubble popped, and then we go back and we grind through, and then we go set the new high and put all these higher lows happening in here, you can kind of get a clue of what that really kind of looked like in here, and to see how these higher lows were getting put into place throughout here, and to see that we still have them happening here for the Dow Jones currently right now. But should we break that down, it starts adding very serious validity to the concern of the move that we are having. I've probably spent 6 to 8 hours of my day every day this week dedicated to poking at the Dow Jones and poking at the stock market, as Bitcoin has essentially just done nothing all week. My attention has really been focused over here to try to solve this and try to figure out, where does that line in the sand get drawn? And if we do that, if we go take out those lows, we would take out the 618 Fibonacci retracement level and then take out our first lower low, right? We would essentially set our first lower low. That would probably be the first major concern happening in here, because we do see in these circumstances, if we're going to grind on and set a new high, a series of higher lows. And the second we lost one, we've seen lights out happen in the market. Now, do I know that for certain to be what will happen in the event of a lower low happening? No. But has it happened the last times? Yes. So while it's holding here right now, actually, everything's still okay. This thing could just turn itself up. This was just a big pullback taking place in here of this magnitude right in here, pulling back into like this bull flag, and then rip its way up to go hit which would be our 4.236 extension, right? Boom, you go on and hit it and make logical sense as we've then now completed everything and matched up to the things we've seen happen even over here in Bitcoin and in Ethereum and in the crypto market. And hopefully having a pretty exciting time in the cryptocurrency market during a moment like that. But it's something to keep an eye on. And like, if we're just like looking at the timing of everything kind of aligning in here, I mean, we're looking, by the end of 2023, should these things hold in here, likely means excitement in the market happening, but then careful. And so right now, certainly right now, I'm like, okay, careful. But I do also see what we're doing, right? I see consistent higher lows being put into place. I've seen that that's exactly what we do in these circumstances to go grinding up. And I do see that moves of this magnitude can happen in here and that nothing has deviated away from that just yet. But in the event of a new lower low starting to get put into place, we've seen what happens in those circumstances too. So just to kind of be cautious on that too. So, my thesis of the market, this is my unique thesis of the market. I think that we only have the 4.236 extension to go in a best case scenario for the market. But I also do see the case to argue that things haven't broken just yet to say that we're not going to, that the consistent higher lows are still all on track in current times, 2023, as they were back in 2019 and as they were back in the early 2000s. And it's just kind of something to keep in mind with too, is that how often this happens. And in 2021, nobody thought Bitcoin could just go set a little new high and then turn itself over and go. But that's actually that's how the Dow and the stock market even behaves all the time. Bubble pops in 2000, isn't able to exceed it until 2006. Everybody's excited 6 years later, whoop, over. Right? Parabolic rise stops there in January of 2018 with the crypto market, and the Dow Jones here runs sideways, breaks out. Everybody's excited. New bull market, whoop, down it goes. So just exceeding these new highs and doing things like this is not out of the norm and is totally normal in the ending phase of a bubble to go on and hit its 4.236 extension, as we just showed with Bitcoin. But as of right now, it hasn't broken. But there's going to be a lot of eyes on it today and in the coming weeks to see that a bounce and a recovery can come in here. And that's what we're kind of hoping for, is that here in just the next couple of weeks, this thing can really turn its way up and start some parabolic growth to happen in here. And maybe 5 more waves to kind of finish this thing off. And hopefully the most exciting end of the year possible for the cryptocurrency market at the same time. But as of right now, keep an eye over there on the stock market. Keep an eye for a break of a lower low. In the event of a break of a lower low, it will deviate away from structures that we typically see for something like this to happen, and then probably provide some concern over there for the crypto market. As of right now, though, if you had to ask, what are we doing? We're just doing what we do. Higher lows, waiting for the parabolic ending. But keep your eyes on it. The Dow has about a leeway of about 465 points to the downside before something like that would happen. But this is like the main thing that I am watching, and I wanted to share it with you. And there's no question, I've been beating my head against a wall on this, but the most simple way to look at it is really just this. This is probably the most simple way to think of it. And for those who do follow the BZB crashing structure, we do have all elements of it already being here and having already completed itself right now with 1, 2, 3, 4, 5, 6 back in there, and 7 already happening with 1, 2, 3, 4, 5. And the funny thing about this is we actually have already seen this happen in silver. That silver actually just did this recently. It did the 1, 2, 3, 4, 5, 6, and 7. And then whoop, worked its way back up. And it seems almost like silver's been like ahead of the Dow Jones recently. That if we like added on top, that you could see silver's been running ahead of the Dow ever since back over here. Really, they were kind of in unison. And then suddenly silver kind of led the way. The Dow then followed 6 days later, doing the same thing. And then all these structures here in silver are being printed like a week ahead of the Dow does. And then the Dow does essentially the same thing as silver. But this time it takes August 2nd to the 15th. It takes 2 weeks for the Dow to eventually follow in the footsteps. And then here we go. So we could see what silver did just recently. Whoop, worked its way back up. So I thought this was interesting to show you as well. But all right, we'll go ahead and start wrapping this thing up, you guys. I wanted to show you what's going on in the stock market. I think that's the biggest story of what's happening right now. Keeping an eye to maintain those lower lower lows. And so far, everything is still just holding okay in there, but keep a close eye on it. That's what I'll be doing for sure as we head into the weekend. I hope that you all have a wonderful weekend. I want to thank you all so much for watching. If you're looking for something to do throughout this weekend, of course, you could check out my website over here, which is bcbacker.com. It's over 40 videos, over 11 hours of content, deep diving into the cryptocurrency market, talking about different structures and setups and different patterns, Wyckoff accumulation and distribution, Elliott wave theory, historical behavior of the cryptocurrency market, and understanding how the price action has behaved throughout the past, along with a lot of like secret sauce from market experience, such as research that helped improve odds, talking about tokenomics, crowd behavior, and of course, the thing we all need, emotional management. There's no subscriptions here. There's no recurring fees. And it also includes downloadable PDF files so you can print this stuff out for yourself as well. You can check this out over here on bcbacker.com. Guys, have a wonderful weekend. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.